Hey guys, welcome back to the Wickerbottom commentary series. We're going to resume here. So on the last episode, someone left a comment below that I had already seen the blue mushroom forest, which always attaches to the muddy lightflower forest, which always attaches to the ruins, which is where I'm going. So I'm going to be heading to where that blue mushroom forest was and heading straight to the ruins this episode. And today our topic is going to be insurance, such a lovely thing that everyone wants to talk about. But basically, I'm going to talk about should you get insurance, should you not get insurance. First things first, you got to know what insurance is. So basically, insurance is pretty much a form of gambling, except you're gambling against the worst possible thing happening in whatever scenario it is. So say you're buying house insurance, you're gambling that your house is going to burn down, and in that situation, they're going to pay out, and you're going to get at least part of that value of your house back from them. Okay, so where are we going? We're going to this cave entrance. So with that, insurance companies make money. They're companies, right? They gotta have a way to make some profit, and really the only service they are providing to you is what I just said, is paying out if the thing goes wrong. So basically, it's very much so against your interests most of the time to get insurance statistically. But the fact that it is hedging your bets against something that possibly bad could happen makes that a lot of people think getting insurance is a smart thing to do. Chester's over there, but I don't want him right now. What was I going to say? Yeah, they say insurance would probably be a good thing. You'll probably hear some older folks be like, these darn kids, they're not getting any health insurance, which is absolutely correct. These darn kids aren't getting health insurance because what happens here is with an insurance company, so say you have 10 people, right? And all 10 of those people are paying in $100. So you get a total of $1,000. Let's say this is health insurance. And then they do the math on that to say statistically, we're only going to need to pay out 900 of those dollars because statistically, only one of those people will get minorly injured out of those 10. Just that's the way they mathematically did it. But normally they do that across millions of people at the same time. And actually, it isn't just, a 10% profit margin like that. Normally it's a good 30, 40%, really high profit margin. Okay, let's head over here. Oh, a grotto right there. So yeah, basically they normally have a really high profit margin, and basically they make money off of selling fear to you. So they'll go ahead, they'll be like, yeah, you got to get this health insurance. Otherwise, what happens when you get cancer and die at 12 years old? Chances of you getting cancer and dying at 12 years old, not very likely. Not at all likely. And if that was to happen to you in the United States, you could actually just get the government to pay for it. So it's actually completely unnecessary because you have these things called Medicaid and Medicare. Blue gem there, that's cool. We're going to go get some grass from over here. So basically, let's talk strategy then. So what I got to say first is health insurance is one of the ones that you can strategically be very smart about. And this is mostly a United States thing. A lot of other places don't have health insurance. They just, they basically make the government their insurance policy, so they pay in using taxes. They have higher taxes, and then the entire country is forced to get insurance through the government, basically, and they call it free healthcare, which is a lie, but we'll talk about that later. But basically, health insurance in the United States, when you are a young person, is pretty much something that you would never want to get. So you'll hear older folks be like, these people are being irresponsible, they don't have health insurance. What if they break a leg? That's pretty foolish of them to say. So here's the thing. Health insurance costs multiple thousands of dollars per year. You'd be pretty well set to get away with it at like, say, good $6-7 grand a year. That would be a pretty cheap plan. That would be pretty hard to come by. But with that, they'll be saying, oh, what if he breaks a leg? That'll cost 10 grand. Pretty unlikely in the first place that you break a leg. And second off, what you should do in this scenario is basically what you want to do is in your investments, you want to contribute to a few things first with the money that you have. Is first off, you want to contribute to a home that you own. So every state's different with this, but basically in bankruptcy, there's certain things that they can't take away from you. Bankruptcy is basically when you're declaring that you can't pay off your debts ever, right? And so then the debtors all go away. The debt basically gets cleared, and they take away whatever they can squeeze from you still. So in my state, they're not allowed to take away a house, 100 grand worth of a house. They can't take away your primary vehicle, and they can't take away your retirement accounts. So basically, what you do is you just start shifting all of your net worth into those things. And then in the case that, say, you got cancer at 19 years old, let's say I just got cancer tomorrow, I got stage 4 cancer. I just go into the hospital and I get treated. They're not allowed to deny you treatment in the United States, by the way. It doesn't matter if you can pay or not. They have to treat you if they can. So they would go ahead, give me my chemo, whatever it is. And then after the fact, I go and see if I forget which one it is, if it's Medicaid or Medicare, that's for the low income thing. I would not qualify for that. But if you were in this scenario, you probably would qualify for that. I'm a pretty high earner for my age. But what was I going to say? So basically, in that scenario, what you do is if you don't qualify for whatever one it's called, Medicaid or Medicare, then what you do is you say, yeah, is there any charitable assistance available? And they'll check for you and see if there's anyone, willing to help out because you're unable to pay, right? Because getting a cancer treatment for stage 4 cancer and actually getting through it, it's going to cost multiple hundreds of thousands of dollars, if not millions of dollars. And then see if there's charitable assistance. Normally, there's going to be charitable assistance, which you can take advantage of and just get basically 100% of your bills paid that way. You might have like a grand or two left, in which case you just go ahead and pay cheaper than getting the health insurance. And in the scenario that they do not pay for that, they don't have any charitable opportunities, what you do is you just go straight to declaring bankruptcy. And basically what you did just there is it costs many professionals a lot of time. It costs them a lot of equipment that was very expensive to build, to use on you. They had to do all that stuff, right? And you just got all of that for free. And you basically just made all the doctors, the pharmacists, the people who are researching this life-saving equipment, you basically just enslaved all of them through just declaring bankruptcy on that. For just a little bit of time, right? Because you just screwed them. They made no money off of that. They didn't even make back their costs on that. You just stole from them. But that's the way the system's set up. So you can just go ahead, declare bankruptcy on whatever it is, your $1 million in health issues, which is very unlikely for you to get in the first place. And you could be perfectly fine. You can get away with that, and there's going to be basically no repercussions. When you declare bankruptcy, it's like harder to get a loan for a couple years. They say it's like 7 years, but that's actually not true. You could get a good, nice, large loan within like 6 months again. If you can show a bank something that it's like, yeah, I mean, I can show you right here. I'll be making money on it. I just had cancer, man, and I had to declare bankruptcy. The bankers are going to be willing to loan you money. They don't care. They just want to make some money, right? So yeah, in that situation, you just avoided paying, $7,000, $8,000 a year, which is like a good half of what you'll probably be making by not doing the stupid thing that they recommend to you. And right here, I just entered the ruins, so you can tell because of the lichen, the slurper there. And then there's this nightmare light up here. That actually shows that we are in nightmare phase, which is extremely dangerous for me to enter. So I'm just going to try and stay back for a bit until it changes. Let's get away from the depths worms. Actually, I want those carrots up there. Give 'em. Okay, and then, yeah, let's talk about the other types of insurance. So basically, what I said earlier is, it's gambling, except you're gambling on the worst possible scenario to happen. So first off, what you're doing there is subconsciously telling yourself that if the worst case scenario happens, that's okay. So it's actually going to be more likely to happen. So if you get health insurance, you're more likely to break an arm, a leg. If you get home insurance, you're more likely to burn the house down. All those types of things. So that's the first thing you got to think of there. And then second off, you got to think about how they are making a profit on anything that you're buying here. So I'm not saying that 100% of the time it's bad to get insurance, right? Because there are times that insurance makes sense. Say, for instance, you're like a pro motocross guy. So you do all those crazy flips and all that jazz. And you go to get health insurance. They don't actually check to see that your occupation is motocross guy, who's probably going to be paralyzed in 6 months. So you can actually get health insurance through that for real cheap. And you wouldn't have to deal with all the other stuff I was talking about, like declaring bankruptcy on getting your paralysis and all that health care. And then home insurance. Let's talk about that one. So basically, home insurance, they tell you when you try and get it that it basically covers everything, but most plans do not cover everything. Say, for instance, you got robbed. Oftentimes, the plan will cover at least part of the value of the stuff you got stolen. But here's one I was looking into. If your house gets struck by lightning and that causes it to burn down, most plans, an average plan, will only cover 70% of the house then. Yeah, so if your house burns down, you know, you get the worst case scenario, you're still screwed in that one. Maybe it would have been smarter to, you know, get a nicer house that wouldn't burn down when lightning struck it, and such a foolish little thing like that. And then other types of insurance. Life insurance. Life insurance is generally one of the ones that the most scammy. There's a couple types of life insurance. There's one that's basically a forced saving policy. So what they do is you just keep adding money to it, and then the amount that gets paid out when you die just keeps going up. Except they basically just keep 40% of the money on that. A lot of older folks have that, and it's a very foolish one to get into. And then there's the other type, which is pretty much normal insurance, where you just pay a certain amount of money every month, and then in the case that you unexpectedly die, then a payout goes. So normally it'd be like $500K, $1 million, pretty high amount. I am not finding this here. Where is my village biome? Okay, we'll go this way. So yeah, basically there. In either of those, though, the thing is, their profit margins are super high. And then also, I'll say with life insurance, if you have like a family or something, you know, they try and sell it to you and be like, what's going to happen to your kids if you're not there for them? They'll try and guilt trip you like that. In the United States, we have this thing called Social Security, which is basically you're paying into a retirement plan. It's a total Ponzi scheme, but that's another thing to talk about later. But basically, with that, if you were to die, you know, you had a couple kids that you were the breadwinner for, they would actually just get your Social Security right then and there, which means they're going to be getting payments for the next couple of years. They're going to be fine. They're going to be okay. It might not be easy for them, but they're going to make it just fine in that scenario. And it's a pretty unlikely scenario to happen in the first place. Plus, like I was saying earlier, you're subconsciously telling yourself, it'd be okay if I died. So you're actually just going to make it more likely then, which is always just such a great thing. You know, you always want to make it so you're more likely to die. I'm such a fan of that. Okay. And then home insurance, auto insurance. Auto insurance is basically required that you have for the other person, at least in the United States, that if you get in a wreck and you damage someone else's car, they get paid out. If you hurt them real bad, they get paid out. This is the Ancient Guardian? This world gen's messed up. Okay. We'll go kill him this episode then, since I still have some sanity left. That's cool. What was I gonna say? So yeah, basically, insurance, most of the time, it's statistically against your best interest. There are times when it makes sense to get insurance, though. I'm not saying there aren't, because there are a couple situations. Generally, those situations, you'll already be required to get insurance. Like I was saying earlier, auto insurance for other people. You're required to get that, because if you injured someone, you know, you broke their neck and they've got to get that paid for, then they've got to have something to pay for it. And if you got $2,000 to your name, like most people do, or they have negative 40 grand to their name, then there's got to be something there that's available to pay for that. And there are ways to get past that too. I think if your net worth is high enough, you're actually able to declare something that says, I'll just pay for it. But I'm not sure exactly how that works. I haven't looked into it. But and then there's other situations like certain times when you get very, very wealthy. If you take out a big loan, the banks will actually require you to have life insurance because they got to make certain that the loan gets paid back in the case that you die. Okay, we have a really nice spot to get him right here. Come on. Get away. It's good that I found this early because the new Sandy changes make it really difficult to kill him when you're insane, because shadow creatures just keep spawning on top of you and murdering you while you're stuck in a corner. Yeah, this is going to take a while though. And then other types of insurance. Let me think. Yeah, there's insurance for basically everything. If you're like a famous actor and say your mustache is a part of your persona, if you didn't have your mustache, it would hinder your ability to make money. There's actually a lot of actors like that where that's a thing, and they are actually able to insure their mustaches. You can insure yourself against I think you're able to insure yourself against like aging poorly. So if you end up aging as like an actor and it would make you look ugly and you needed to be very attractive, you're actually able to like get insurance against that. There's insurance for all sorts of things. Renters insurance is generally a required thing because oftentimes renters will destroy houses they're in. Things like that. There's a whole bunch of things where it actually makes sense to get insurance. But what you should do first is see, where they're making a profit, if that is applicable to you, like they're going to make a lot of profit off of you, and see if it statistically makes sense, and then also see if it situationally makes sense. So you just got to be smart about it. Did the horn drop in? No. We got the horn. Okay, and I'm going to check this before we end the episode. That looks pretty decent to me. Pickaxe. Pretty decent loot. Not the best loot. I would have liked a, what's it called? A lazy explorer. Alrighty, and that covers it for this episode. I'll cover the rest of the runes in another episode. Hopefully you guys liked this. Make sure to leave a comment below if there's something else you want me to talk about, and leave a like and subscribe for more.